hold on. Just eating these grapes here real good, huh? Anyway, welcome to, what is it, episode 4 or 5? I forgot. One of those episodes. We're going over the breaker block in the array archive series. Okay, the second strongest PD array. Man, these grapes are good, dude. Jeez, Christ. But just give me a couple seconds. These grapes are amazing. Bro, you guys ever had the green grapes, like the sour, sweet grapes? Bro, they are amazing. Anyway, the breaker block, the second strongest PD array in the PD array matrix, okay? Forms, you want to get a little illustration. I still got grapes in my mouth. I got like 2 of them in my mouth. Hold on. So I still got to chew while I'm explaining this. It's a reversal PD array in a sense. Well, no, not in a sense, but literally. It's literally a reversal PD array. So, for example, price is going down, right? It's dropping, it's going down, right? Did I just delete that? Oh man, this is such an unprofessional video. Look at me. Drop. It's dropping, right? What'll happen is, it'll purge some old level of liquidity back here. This is what it has to do. It has to do this. This is what we call it a breaker block. Well, I'm looking for breaker block. I'm looking for sell side liquidity. There we go. So it'll come up to some level of sell side liquidity. If this was a bullish example, right? It'll come back up, break the most recent swing high, right? Retrace back down into the area of that swing high, in which I'll show you why I'm saying that, because there's a certain candle within that area that price will use to, continue higher. Once it does that, it'll create a breaker market structure, and then there'll be a breaker block around here somewhere. It'll hit the breaker block. If I can like draw something right here. It'll hit the breaker block right about there. And then guess what? It'll keep going higher. And it'll just shoot to the roof. That is what a breaker block is right there. It is a reversal PD array. Pretty simple, isn't it? Yeah, I know. So, let's go over that real quick. If I can just delete all these drawings that I made. Give me just a little second. Let me turn on my volume too. This is so unprofessional. I think this is one of my most unprofessional videos yet. Here we are. So, this doesn't have to occur whenever price is already heading down. Price can already be consolidating, as you can see here. But what price must do is it has to purge some form of liquidity to then reverse, okay? Or to then continue in a narrative that was already delivered, but price took a little break. It was like, man, I'm tired. Let me just consolidate real quick. That's basically what it is. So, as we can see here, price is consolidating. Okay, see that? See that? Do I need to talk to you like a little baby? You see that right there? It's consolidating. See those relative equal lows? Yep. This is called sell side. I know. Yep. Comes down to the sell side liquidity. In which it creates a sell side liquidity purge. And then guess what? It comes back above the most recent swing high, which is right there. See that right there? That's the most recent swing high. Boom. So we'll mark that as a short-term swing. It comes above it. Boom. The breaker block is now activated. What is the breaker block? What is actually the breaker block? The breaker block is the most recent up-close candle, either as the most recent swing or before the most recent swing. So, since the most recent up-close candle is as the actual swing, or as the actual most recent swing, this entire candle here, you're probably like, what? Yes, this entire candle here is the breaker block. You might be like, what the world? Yes, this entire thing is the breaker block. And I am not kidding. This entire thing is the breaker block. You're probably like, well, since this is so large, you can add quadrants to it, right? Well, of course. Of course we can add quadrants to it. That's a no-brainer. Look at that. Boom, quadrants. See how price just respects equilibrium? Matter of fact, it doesn't even go to it. Because what price must do for the breaker block to become activated, it must break the most recent swing after sell-side liquidity has been purged. Mind you, this is a bullish example, so everything I'm saying here is strictly for the bullish breaker block. It must purge sell-side liquidity, break the most recent swing high before the liquidity purge, okay? Or after the sell-side liquidity has been purged. After it purges sell-side liquidity, it must come up to the most recent swing high that's created before price comes down and seeks liquidity. Once price breaks that swing, which is up here, you can't really see it, but it's like right there. You see that? It's right there. Once it breaks that swing, price will come back down into that candle, or the most recent up close candle, before or as the most recent swing, which is this right here. And it'll retrace into that candle and respect it. It should respect it, at least. It should respect it. Now, what causes the violation of the breaker block is simply when price violates the complete the other side of the breaker block. Whenever you see the equilibrium or the mean threshold of the breaker block getting disrespected, you can expect, not get out of your trade, but you can expect for price to disrespect the breaker block. But what really causes the breaker block to be disrespected is when price literally reaches all the way to the other side of the fair value gap. I said fair value gap. We're not talking about fair value gaps. When it reaches the other side of the breaker block, meaning it breaks the breaker block's low, which is all the way down here. See that? See this down here? That's the low of the breaker block. Once it comes down here, boom, the breaker block is gone. But just pay attention to that mean threshold though, because that's going to tell you if price wants to respect the breaker block. Okay, it's going to tell you that. That's how it's going to tell you that. See that level right there? The equilibrium. That's what it's going to tell you right there. So that is one example of the breaker block. Just one, okay? We're going to go over a couple more, if I can even find any more. My goodness. Let's see here. Yeah, this was a wicked day for price. My goodness. This, yeah, really was insane. I'm not going to lie. Anyway, let's go over here and see if we can find anything. In which we do. Oh, yeah. So, you probably already see it before me. But we're going to do 2 bullish examples, 2 bearish examples. Cool? Is that cool with you? Okay. It's fine by me. So we got a couple levels of liquidity. We got sell side right here. Boom. More sell side right here. Boom. So what does price have to do first? It has to purge these levels. Boom. Sell side liquidity purge. And then guess what? Again. Boom. Sell side liquidity purge. So both of these levels are now purged. What can price do now? It can then come back up, reverse higher, break the most recent swing created before the purging of sell side liquidity. That swing being this right here. See that? So that is your short-term swing. Once it breaks above that, the breaker block is now activated. What is the breaker block? The breaker block is the most recent up-close candle, either before or as the swing's creation. Okay, what I mean by as the swing's creation, I mean the most recent candle, the most recent up-close candle is the actual candle that creates the most recent swing before price purges liquidity and comes down here. So that's not the case here. You see how this swing here, see that swing right there? Look at the candle. Is the candle bullish? Nope. So we need to look for a candle or the most recent up-close candle before it. This would be your bullish breaker block. Whoa, see that? Yeah, pretty nice, isn't it? And guess what? Want to apply quadrants again? Sure. Let's do that. Like I said, see that mean threshold? Look at the bodies. You see that? Bodies barely even came below it. Pretty cool, isn't it? Want to zoom in and see and make it look all extravagant? See that? Boing. Boing, bodies never came below it. Pretty cool, isn't it? Some people call, oh, that's a double bottom, which it is, but come on, we don't do that around here. We use breaker blocks and fair value gaps and volume balances. That's real support resistance. Price hits the equilibrium, respects it, and guess what? Delivers higher. Whoa, does it keep going higher? Yeah, it does. It does. It keeps going higher. But like I said before, when it comes to arrays, whenever price displaces away from them or distributes away from them, the array is now exhausted, in which it does that. See this? It accumulates inside the breaker block and then kaboom. So the breaker block is now over with. And if we draw it out, wow, price actually still stays within the breaker block, which I'm really surprised. I was going to say I'm not surprised by that, but I'm pretty surprised that it even stayed within it because of that displacement there. But I guess you can say it didn't really displace because it was just 2 candles and then it proceeded to consolidate a little bit after. So I guess you can classify it as it's not really exhausted yet. But it did venture deep into it once again, respecting the equilibrium again. You want to see that? Want to see? Whoa, pretty crazy, isn't it? Yeah. So it respects the equilibrium and then it really distributes away from it, exhausting the breaker block. So right after this move, the breaker block is now gone. Now let's find a bearish example. Hopefully I can even find one. Let's see, I have to find some form of a buy-side liquidity purge. Yeah, there we go. Okay, here. This is perfect. So you see all this buy-side liquidity right here? Yeah, a lot of buy-side. See that? Boom, got that buy-side liquidity right there. And guess we got another short-term swing there. But we're going to focus on this right here. See that? That's our main point of buy-side. Price reaches the buy-side. Then guess what? See, listen here, boy. Listen here. It comes down, right? Breaks the most recent swing low. before the purge of liquidity. See that? Listen here. That's the most recent swing low before the purge of liquidity, okay? Or just the most recent swing low in general. After that, it comes down, breaks that low, activates the breaker block. It activates it. Now, where is the breaker block? Where is it, you say? The breaker block is, since this is a bearish example, we're going over two of them. It's the most recent down close candle before or as that swing low. In this case, it is as the swing low because guess what? The candle that creates the swing low is actually a bearish candle. So this is the most recent candle right here. See that? Draw that out and boom. Whoa, pretty cool, isn't it? Hits it twice. Hits it once, boink, and guess what comes back up? Twice, boink, and continues. Pretty cool, isn't it? I know. Yeah. But after this, the breaker block will be exhausted. See this gigantic displacement? How many points is that? About 60. What time was this? Oh, yeah, that's Asian. Yeah, that's a pretty big move for Asian. 70 points? Yeah, that's pretty huge. So, yeah, this breaker block right here is now exhausted once price delivers lower. And when it retraced here, what it did retrace into was this mitigation block right there. That's what it would have hit. That right there. So that would be the PD rate. It would really be referring to on this second retracement here, because on the first one, which is right here, when it breaks the swing low and on the next candle wicks up into it, that's the, I guess you can say, the first stage of accumulation or whatever. But the first time it touches it and last time it's going to touch the breaker block, because after it displaces lower, the breaker block is now gone. It is completely gone. So let's find one more bearish example, and then I'll be ending this video here. Let's see here if I can find anything. Oh, yep, I do find something. Oh, yeah. Look at that. We got this short-term swing here. See that? Got this short-term swing. Guess what? Price jumps above it, creating a what? Liquidity purge. There we go. So what's the most recent swing low? Right there. See that? Right there. Before the liquidity purge, okay? Before the purge of liquidity, and what I mean by before it is, you see how the swing low is created before price rallies up and hits the liquidity purge, or rises up to purge liquidity? That's what I mean. This is the most recent swing before the purge of buy-side liquidity. So this would be our short-term swing right here. See how price breaks it right there? See that? Are you paying attention? On this candle, you see this right here, that right there, that little doji, whatever you guys would call it in retail trading, comes down, breaks that swing low, activating the breaker block. Where is the breaker block? The most recent down close candle before or as the swing low. Since the swing low's candle is not bearish, it's instead this one. Why? Because it's the most recent candle. Guess what? Draw that out. You see how it comes down below the swing, right? See that? Breaks the swing, retraces into the breaker block, accumulates for a little bit inside of it, and then you can clearly see what happens. It's just gigantic, beefy candles. Yeah, it's just, yeah, yeah. Yep. Yep, and it just, yep, I know, yeah. Pretty, yeah. Jeez, why did that go for so long? My goodness, was that during Asian? Yeah, that was during Asian. That's crazy. Wow, yeah, that's a pretty vicious move for a breaker block. That's insane. But there was a liquidity void here, so I'm not surprised that price expanded so much. That was only a 100-point move for Asian. But anyway, I gave you two bearish examples of a breaker block and two bullish examples of a breaker block. Anyway, enough of me yapping. I'll see you guys in the next episode. Good luck and good trading.